Welcome to Mr.J's Lifestyle channel. This video is made for beginners who wish to trade in the Malaysia stock market. Allow me to start off with a little story. So here we begin. When I was 18 years old, I was exposed to statements such as, you can make a lot of money if you know how to trade the stock market. You could be lying down by the beach somewhere around the globe, reading your favorite book, sipping your mojito while the stocks do the heavy lifting for you. Those very sentences had created a visual in my mind, which led me to explore and self-learn how to trade the Malaysian stock market due to curiosity. With little to no knowledge back then, and without any guidance from any experienced gurus, it took me a long time to finally understand the basics of trading. It took me even longer to get started. Thereby, this video will serve as a guide for you to get started from zero. A quick disclaimer, this video does not have any elements of cash rich quick. Instead, after completing watching the video, you will be able to gain 3 things, which are: own your own CDS account, have the basic knowledge on the stock market, able to use the application to trade live stocks. Upon gaining the 3 things, I will be also throwing you with a challenge. I personally challenge you to make your first 100 ringgit from the stock market within 1 month of watching this video and share your results in the comments down below. With that, let's get started. Comes the question, how can I start trading Malaysia's Bursa market? The first step that you need to do right now is to open a CDS account. So what is a CDS account? CDS stands for Central Depository System. Before buying shares, you need to have an account which you can store your shares. So in simple explanation, you need a savings account with the bank to keep your cash, and CDS is an account to keep and hold your shares. Then, where can I open a CDS account in Malaysia? You can open a CDS account with any investment bank in Malaysia. Here are some that you can explore, such as Maybank, CIMB, Hong Leong, Public, RHB, Affin Hwang, and more. To open an account with the bank, you need to be physically present to submit documents for your application, and it may take 3 to 7 working days to get your account activated. If you do not wish to open an account with a bank, there is another option. The platform which I use on daily basis to trade and screen stocks is known as Rakuten Trade. The reason why I opened this account was because it is 100% online and it is supported with a mobile application, which means you do not need to go through the hassle of being physically present to an investment bank branch right now. The platform was even recently featured on The Edge Malaysia. You can read more about it and do your own research into the company. Since I'm speaking of this platform, allow me to guide you through the account opening process right away. Do take note, there's an upfront fee of 10 ringgit to open a CDS account. Once you have arrived at rakutentrade.my, head over to the top right corner and click Open an Account. After that, you arrive at this page where you will need to make a choice either to open one account or multiple accounts. There are 3 accounts offered by Rakuten Trade, which is the cash account, contra account, and margin account. I will be making a separate video to discuss the differences between the 3 accounts, so remember to tune in for that. For a start, a cash account is more than sufficient for a beginner, so click sign up. Then you will arrive on this page where you need to fill in your basic information, followed by personal information and financial information. Just follow and fill in the blanks. Drawing your attention to the first field, which is referral code. If you find our video to be beneficial so far, we appreciate if you could place our referral code so that we can earn some Rakuten points. Otherwise, it will be fine as well. After completing filling up the e-form and submitting, you just have to wait for an email from Rakuten team to inform that your account has been verified, then you may begin your trading journey. While waiting, let's look at some basics of stock trading. Buying a share of a company is like becoming one of the owner or investor for the business. In Malaysia, you can buy any public listed company shares via your CDS account. Using one of the listed company in Malaysia that everyone might be familiar with, known as AirAsia, I'm going to provide you with an illustration. Assuming today's share price of AirAsia is 70 cents a share. To be a shareholder of AirAsia or any public listed companies, one must buy a minimum of one lot of shares. And one lot of shares is equivalent to 100 units of shares. Which means one must invest 70 ringgit to be one of the many shareholders of AirAsia. Bring out your paper and pen and let's do it together with me, as these basic calculations are required almost on a daily basis. Next, using the same company, I will be illustrating a buying and selling transaction which may result in a profit or loss. Assuming today you are buying 500 units of AirAsia shares and invested 350 ringgit in total. So 3 months down the road, the price of the shares has increased to 1 ringgit per unit and you have decided to sell. With the 500 ringgit selling price, after deducting your initial invested price of 350 ringgit, you will result in a gain of 150 ringgit profit. Congratulations! Not too bad with a 43% return on investment after 3 months, isn't it? Remember, this example is excluding brokerage charge, so let's see what will be the profit like after deducting the charges. Brokerage charge can be calculated manually, however I prefer to use an application instead. Download this app known as the KLSE Screener on your Google Play Store or App Store right now. Then maneuver to the fees calculator screen. The screen will look as such when you key in your details. Remember to edit your brokerage charge to 9 ringgit before using the calculator, as Rakuten charges 9 ringgit per transaction for its brokerage charge. You will be able to see that there are other fees involved when you perform a trade, such as clearing fees, stamp duty, service tax on top of the brokerage fees. An advice would be always make use of the fees calculator to plan your buying price and selling price so that you may know where is your break-even point, and it would assist with your trading plan. Many would be curious as to what influences the share price. There are many factors which can influence a share price, but I will be focusing on 5 general factors only. The first one would be supply and demand. When the demand of a share is more than its supply, will the price increase or decrease? Let's look at the illustration right now. The picture shows an empty shelf, which means supply is low. However, there are many people wanting to purchase the item that was on that shelf, which means the demand is high. When the demand is higher than the supply, chances are the people are willing to pay a higher price to get the product, as there is a shortage in the market. Therefore, the price of the product may increase. How about the other way around? This time, the shelf is full. However, there are only a few people wanting to purchase the item on that shelf, which means the demand is low. As manufacturers, for them to clear their shelves, they would choose to reduce their price so that more people are willing to buy the products. By reducing the price, they are hoping to create demand for their products. So in this case of supply more than demand, price would likely reduce. Using real-life examples, here are some headlines which illustrate that everyone is wanting a face mask due to a sudden outbreak of a virus. However, there are not enough face masks in the market. As consumers, they are willing or unwillingly to pay more to make sure that they can get hold of a face mask themselves. Thereby, the price of face masks will increase because demand is more than supply. The next example would be the world is running out of places to store its oil. This is clearly an oversupply of oil, just like the shelves example given earlier. To clear the oil, manufacturers or producers have got no option but to reduce their price in hope to create the demand to clear their inventories. Therefore, the price of oil reduced significantly. Aside from supply and demand, human emotions, political direction, company fundamentals, and other global factors generally play a role in influencing a share price. To illustrate the 4 other factors, I will be using the Bursa Malaysia KLSE index graph. In my personal opinion, share market is made up of investors, which are people. Investors will invest when they are confident and will withdraw when they are fearful. Furthermore, investors are all human beings, which means they can be influenced emotionally in their decisions. Thereby, news will always play a big role in influencing their decision. For example, on the 24th February, Bursa KLSE index has fell to a low of 1487 points as seen in the graph. This was about the same time where there were rumors that our then Prime Minister is resigning, which he eventually did. It has created uncertainty among local and foreign investors, which resulted them to withdraw from the market. Here you can see that political direction and human emotional reaction can result in a downfall of a share price. The second wave, when the index loses its ground and fell, is also about the same time a new Prime Minister was about to be elected, where there were a lot of uncertainties and complications which led more investors to withdraw from the market. Once again, political direction has influenced human emotions. On the third wave, the index fell further. About this time, there was a health crisis around the corner, added with the mixture of political crisis and change in monetary policy. More investors became cautious and started to withdraw themselves over fear that a recession is coming. The pattern of political direction which influences human emotion is once again displayed here. The biggest downtrend to an all-time low happened right before 19 March, where there was a combination of other global factors, political direction, which can potentially affect companies' fundamentals, resulted in humans' emotional reaction to withdraw totally from the market over fear. The oil crisis, Dow Jones' biggest drop in history, implementation of movement control order, shutting out of all non-essential services business, cancelling tourism plan, which eventually puts a sudden halt to the economy. Since the 19th March, the index has gradually climbed its way back up due to many stimulus being announced by the government, which built confidence among its people and the economy. With the new political direction after 19 March, human confidence are slowly being rebuilt, and thereby it shows signs of recovery in the market. The 4 factors has been displayed clearly in the example given, and by now you should understand the factors are always interlinked. Then comes the next question. Will I always make money from the stock market? This is a yes and a no question. There are people that consistently makes profit, while there are people that consistently make losses. After studying their differences, it is very clear to me that their mindset are both different. One has the gambling mindset, which believes that you can make fast money from the stock market, and by constantly betting on stocks, just like how they would play in the casino. They are playing based on chances and luck. On the other hand, investing mindset investors will conduct proper research of a stock by studying its fundamentals and trends, before making a decision to invest. So you get to decide which mindset you wish to adopt when you start your shares trading journey. No doubt that sometimes you will make losses, but the idea is to consistently make profit on a daily, weekly, monthly basis. Trading the share market is like playing a game of chess. Every day is a new game, and with every new game, there will be always winners and losers. Understand how the stock market game works, then eventually you will win it. Showing you some example that during a downturn, some companies will lose its value, and yet some will reach a new high. Here's the first one, which fell more than 70%. The second one, which fell close to 80%. The third one, which grew more than 30%. And the fourth one, which grew more than 40%. So it is possible to make profit even during the downturn of economy, because surely there will be always companies that will benefit from a crisis. By now, your CDS account should be active already. So let's run through how to use the application. Open your iSpeed.my application on your mobile and log into your account. The first thing that you need to do is know how to deposit and withdraw your cash from your CDS account. On the bottom of your screen, press on My Account, then click on the blue icon to start depositing money. You will arrive on this page to key in the amount which you want to deposit. After keying in, just click Proceed to Confirmation and transfer using any online banking facility which you have to your CDS account. So once you are done with that, your amount will immediately reflect in your CDS account. For withdrawals, you just have to click on the red icon under My Account to withdraw. Do note that minimum balance of 20 ringgit is required to be maintained in the account. To search for a stock, tap on the search button on the bottom of your screen, then key in the company name or the stock code. Select the company name and you will arrive on this page. Here you can view the current market value of the stock, look at some past and present data, and you can swipe right and left on the chart to view more information. After you have looked at all the information and have decided to buy the stock, click on Action button on the top right corner, then click on the Buy Order. Insert the price which you would like to buy. For example, 0.72 is the market value, then key in the quantity. Remember, 1 is equivalent to 100 units of share. Key in your trading pin and click Execute. After executing a trade, if you head over to Order tab on your bottom of your screen, you'll be able to see that your order status is acknowledged. You have to wait for it to turn matched. Then you have successfully purchased the shares. To view your purchased shares, click on My Account followed by View Portfolio. There, you will be able to see all the shares that you have purchased. Tap on the green title bar. You'll be able to see more information on your shares such as dividend yield, price earning ratio, and profit and loss ratio. As for selling stocks, using the same View Portfolio page, tap on the stock which you intend to sell and tap on Sell Order. Key in the value which you wish to sell with the quantity and similarly wait till your order is matched. Then you would have successfully sold the stock. The common question any beginners would ask would be, which stock to get started with? There are many industries which you can look at, from airlines, to health, to properties, logistics, and more. I would not suggest any stocks to you at this point. Starting off by thinking what is the common product every household can't live without, and it is constantly being consumed or purchased on daily, weekly, or monthly basis. Then you can start doing your own research on more than 700 listed companies in Malaysia to pick your very first stock. There are links in the description below for you to view listed companies in Malaysia, so remember to check out the links. Mr. J, should I trade daily, weekly, monthly, or yearly? That is entirely up to you. Generally, there are three methods of investing in the stock market. The first one will be speculative, where one follows the news or anticipated news to make trades. Usually, speculative trading is using the short-term strategy for quick profits. Buy low, sell high on the same day. The second one is known as technical analysis, where one looks at all data points of a stock, from its volume to its chart to its historical trend and more. Such traders usually trade using the short-term strategy as well as to gain daily profits. The third one would be known as value investing method, where one would buy a stock with anticipation of its future growth and value. Such investors look at the long term and ignores the ups and downs which happen on the daily basis. We are talking about a range of 1 to 5 years of holding and eventually sell. Now that you are all set to start with your first trade, remember trading is a journey. 3 points for you to keep in mind are practice, patience, and focus. A quote from the father of value investing, known as Benjamin Graham, says, "If the reason people invest is to make money, then seeking advice, they are asking others to tell them how to make money. That idea has some element of naive. So be focused, do your own research, and make your decision based on your judgment instead of constantly hearing others' advice." Quoted from the world's most successful investor, Warren Buffett, on patience. He says that the stock market is a device for transferring money from the impatient to the patient. So continuously practice daily, be patient until it becomes part of you, and one day you'll be able to be the master on the art of stock trading. I'll be ending this video with a quote. In stock trading, sometimes we win, sometimes we learn. Do not allow your losses to demotivate you. Remember to rectify your past mistakes, as every day is a new day to start all over again. We have come to the end of the video, so if this video is beneficial for you, remember to click the like button, subscribe button, and share to your friends who needs to watch this video. With that, J's out.